Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Birttany Umar, and together we bring you Morning Call. So our futures point to a positive open this morning, helped by a strong session in Asia. We have China's Shanghai Composite at multi-month highs. Japan, after winning the bid for the Olympics, also seeing its Nikkei lifted. So how constructive would you say this is for equities markets?
It's good to see the world markets actually helping lead, because over the course of a lot of this year, especially China and the Shanghai Composite, people are talking about a hard landing and it's going to be a big headwind, so to speak. But the trend did change over the summer. And if you look here at the FXI, which is an ETF that we use sometimes to trade China, this was the peak back in 2013. Okay, here was a trend that it broke below, and then really struggled ever since. But then over the summer, you had this small double bottom in June and July, and then what was really important right here was that, first of all, you had a gap up that didn't get filled, which is typically bullish in our opinion. And then during August, when our Dow had a 4% decline and the S&P was down 3%, you only had a minor pullback. So that showed you commitment to this double bottom. Then, once we rallied, you had a quick move to resistance, and then here you go again. As soon as we started to come off of our August lows, you saw some power in the Shanghai, and it's continuing. So with that said, that's how a new trend is born. So at this point, hard to chase a market that's at multi-month highs, but I would say now let it follow the 8 and 21 day, which we talk about, and that the next time it touches there, if you want some exposure to China, that's where you get it. As far as the Nikkei, a little bit different. Okay, it was in a really strong uptrend. Okay, it started the year in fuego, starting from way back when, and then you had that outside day, just like our markets. Okay, you had a quick decline of almost 20%. This is when everyone seemed like they were jumping out the window, but we talked about how, after a 50% move from November, that a 20% might feel extreme, but not really. Anyway, it's been developing a pattern going sideways, and, it's been a little sloppy, so I can't say it's been so clear-cut, but at this particular point, never violated this. You have another gap here, some resistance. I would say it could be back on track. If you want Nikkei exposure, especially with them getting the Olympics and the hype that might be circulated around it in the coming years, I would say, buy it in this area and just put it in the drawer. And at some point, we take out this area, maybe 1180. And I'm not sure if it's going to be 2013, but in my opinion, come 2014, this high of 1243 will not be the overall high.
So if we transition then to a look at the S&P after a model session on Friday, how would you say we should approach today?
I think a lot of traders probably coming in a little bit flat-footed. I'm coming in a bit flat-footed also because, the first half an hour was really extreme and potent. So whenever you have an extreme potent move to the downside, like we saw in the S&P after the weaker than expected jobs report, you want to take yourself, you want to take a few steps back, so to speak, because, if they could do that then, they could probably do that at any time. And then all of a sudden, we rallied back to go flat at noon, pushed to highs, closed as a doji. And overall, I think the big question right now, Brittany, is that, people are trying to figure out whether or not that August-September low is in. Okay, was that the low, and are we going to see new highs? And it's hard to give a concrete answer on that right now. Now, if you look at the chart here of the S&P, you will see you have two different patterns here. One, is the move from November, this trend line that's been intact. Here is a test of it in June. And then it looked as if it was going to break it come August. It was hovering right here. But you know what? It didn't. If you took risk off on this head and shoulders pattern right there, we'll take a closer look. You've been in pretty much a tactical position, kind of like how I've been, since this area. And then right around here, you had some signs to buy versus 1627, because that is that low. And now you have this, new big travel wide range bar. So the question is, I would say, write down 1664, which is the 50-day. That'd be a step in the right direction for the bulls. And then also here you have, 1670. So if you were a bear and you were looking for this trend line to break, I would say you would hope that sellers, I would say, defend anywhere between 1670 and don't let it close above 1680. This would be, what the bears would want. They want, this to be an overall macro head and shoulders pattern. They want this to be your left shoulder, this be the head, and this be the potential right shoulder. But at this point, you can't say that yet because we don't have enough time.
Well, you mentioned the weaker than expected jobs report. We did not add as many jobs as economists expected. But with the strength that we're seeing in world markets, how would you say all of this plays into tapering expectations?
You have like this one big formula where everyone says the next data point is going to be exactly what the Fed's going to do. which it's just, I don't think it's that clear cut. The world economy's strengthening is good no matter what. That will help overall in the future for everyone. As far as our economy, you know what? A disappointing jobs number. It's disappointing, but then they say, okay, the Fed will stay the course. Fed's going to stay the course, I think, in my opinion, regardless. They're not going to just pull back too much, let everything fall apart. They do watch the market, I believe, more than everyone thinks, and they do base some of their decisions around the composure of the market. And right now, you know what, it's still going to be push-pull. I still think that they taper. It'll be maybe taper light, maybe 10 to 12 billion, somewhere around there. And I think the process is just going to be a process. And the better economic numbers we get, I think overall for Main Street, it's going to be good. And then that will at some point be good for the economy. I want the markets to go up based on good economic news, not bad news because the Fed's going to stick around longer than they probably should.
Right. We want to get back to good news is really good news.
Exactly.
Well, let's check the temperature of the sector, starting with the strongest and going down to the weakest sectors. Now, biotech did show relative strength during the market pull-in in August, and it remains the strongest sector.
Yep, and again, when you're in a decent position where you're not too caught up in a pullback, you get to see what it means. And what it means is when certain indices like the Dow goes down 4% and goes to the 100-day, and a group like the bios only go to their 50, that's relative strength. And you look right here just to show you how you could uncover that. Here's the IBB. It pulled into the 50-day while most indices went to the 100-day, and it was the first group to snap back. Now, if it could clear this little 202.91, you're going to see fresh highs here, and there are a lot of good-looking stocks within that group.
Speaking of relative strength, there are a lot of stocks showing relative strength within the energy group, and the XLE then has been able to get back to highs.
Yep, and this group was a laggard group with the OAHs for most of 2013, but things rotate, and over the summer with Syria, with I guess Egypt and oil prices going higher, some monies went into this group, and if you look, it now looks poised to take out the old May highs. It's been following, a decent trend since the low. Okay, it hasn't been so powerful, but it's been, there's been activity there if you want to be there, and now this 84 is going to be huge. So traders should look at this 84. If we get a powerful move through it, you want to be in some of these names, and this is a group that's showing relative strength as of now.
How about the Russell? Managed to close in the green on Friday, closed up 0.27% and closed above the 8 and 21 day. So that's some relative strength there.
Yes, and then this looks a little bit more like the S&P, where at certain times it's been like blatantly leading the overall markets. Now it's consolidated. It's got a descending channel here. You look at the chart, you will see here it is. Looks a little bit like the spiders. It did hold above the 100-day like you stated, so there was some relative strength there. You take a closer look here, and you will see, you have a high, lower high, lower high, lower high. At some point, I think this group gets frisky, but it's got to take out and change this trend. And I'd say maybe a close above 104 would get some of the bulls excited that we're back on course to take out the 2013 highs.
And as far as the industrials, the XLI was able to repair some losses and close above the 8 and 21 day on Friday as well.
Yeah, and this also looks decent, I guess, with some of the bounce back in the world economies. There is some attention there.
Right.
It's better. Not leading, but better.
All right, and how about the transports? The IYT managed to close above the 100-day on Friday.
Yeah, let's just look at this chart. It too, the Dow has been weaker, and the transport, some of them weaker with higher oil prices. You try and draw a little trend line that we've had here since November. I do think that this one broke it or came pretty darn close to breaking it. It's now reclaimed some of the moving averages. I'm not that active in this group. Again, just like a lot of things you see, a bit of a downtrend here where you have the high of the year, a lower high, another lower high. So, this is the thesis here. The thesis is, we're off the August lows and we're brushing up against resistance. How could we handle that resistance? Do we penetrate it? Do we do a push through failure, or do we just fail there? So, lots to look at in a lot of these areas.
Right. Well, including the financials and the home builders, we often look to those sectors for clues about market direction, and they actually continue to lag the market. So how concerning has that been?
Somewhat concerning, but again, we've seen some money go to the oil names because oil had a big move. We see some money going overseas because of what's been going on there. And, it's as long as they're not big-time headwinds, as long as all of a sudden you're not seeing the financials fall apart or the home builders get crushed. The home builders had a huge 2-year move, so why not let them consolidate for a while? So if we quickly look at the XLF, you'll see that, this trend line actually broke. But again, you want to see if it can reclaim it. It's trying to right here. It's still underneath it, so bears still have an argument there. You still have somewhat of a descending channel here, so it's still below this downtrend. It still has a series of lower highs here. So, there are some question marks around whether or not the financials could get going again, because you look, high, lower, high, lower, high, lower, high, boom. This hasn't changed yet, and it's still below the trend line. So I would say a sharp, quick move above 20 or even above 2020 will get some people to start acting or talking positively about the financials. And if you look at the home builders, they're still struggling because interest rates have gone up so much. So they're thinking that the boom that we just had in housing over the past few years, could quiet down a little. But overall, still holding above 28. If it stays above 28, I think there won't be a headwind. If the home builders start to get below 28 with a potent move, people will notice, and that'll take some of the air out of the bull's horns or tanks or nose.
But it's okay then, because rotation is acceptable. So even though these groups are the ones we like to look to for clues about market direction, if they're not leading, it's okay for some time.
Yeah, every quarter things change a little bit.
Right.
But if they change drastically, then you have to take notice.
All right, well, coming up, we're going to go in the trenches with stocks that showed relative strength last week. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experienced of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with stocks that showed relative strength last week. And the first one we have to talk about is Facebook. After its move on Thursday, it had an extension on Friday and already put it back at highs.
So it's a little, well, how do I say this? People like, Red Dog, why do you keep talking about Facebook? I'm like, because it's working. We talk about things that are working and things that make sense, and Facebook has been making sense on every time frame. Even back to when we spoke about it on Mad Money when it was around 25, 26, and it went down first. Okay, but overall that pattern did build. You look at the chart of Facebook, you will see this was that cup and handle pattern that we were talking about building. Sometimes, we thought maybe this could be a handle long enough, it wasn't. Then we thought right around here, maybe this is a long enough handle, and it just wasn't. So if you were an investor accumulating it, good job. If you were waiting for it to actually trigger, you also did a good job. But here was, the cup and handle pattern right there, where here's the cup, here's your descending channel. The buy points were when it took out this handle. Even if you waited till 32.51, right around here, which is at that gap, you still did fine. Okay, you take a closer look at the pattern here, and you'll see here's your gap up after earnings. This is when it took out 34-ish, and that was buy area number 1, even if you didn't have it long into earnings. Quick move, a little bit of a retracement above the 21-day. Another nice buyable pattern when it took out this pivot, then held above it. Then he even had another buyable pattern when it crossed this 42.28 area. And then on Friday it extended, and now it's above 44. So overall, really nice move on multiple time frames.
And another social media name, LinkedIn, had an ignited move on Thursday and then was able to see nice follow through on Friday as well.
And, again, we've been talking about this for a year and a half, 2 years. This was the first one that had that cup and handle pattern, and then it's given multiple opportunities since then. Let's just quickly take a look at the difference between both cup and handles patterns. If you go back, you'll see this one was more of a shallower type of cup because the IPO wasn't such a disaster like Facebook, and then its handle wasn't descending in nature, it was horizontal but similar. So again, you take this move out of the way and you just want to look at the cup and handle. There it is. Okay, cup, here's your handle, and then power. Okay, and from there, it has been powerful. So you go back to the daily chart, and there was a nice little setup last week. Some guys on this day were long it, got caught on the secondary announcement, but if they held through, or if they or if someone wasn't in it and you bought it on the offering price, which still held above the 21 days, so it showed you that the complexion didn't change because of the offering, you had a nice 2-day trade. Powerful too. And then it closed on its highs Friday. So overall, this group has been very hot. And just real quickly to throw out there, guys have been chirping about Yelp. It also had a lot of relative strength in the August pullback and then had a nice 3-day move. Congratulations to Sperling. I think he's been sitting on some options there for a while as he uncovered that relative strength.
And how about Netflix? A little bit of a different story here. Provided some nice two-way action on Friday.
Yeah, and that just goes to show you how you can trade these things even and not be married to them. We talked about if it can get above 290, it could potentially squeeze to 300, and then on its way to 300, there was some analyst on TV that was bashing the stock, and it got a little weaker. And then some guys were looking for a quick, cute trade, against the trend. And if you look here at Netflix, you'll see here's the real trend, which has been up to the upside, and it's been very strong. And then you've had a few Bible areas, one right here, one right there, and then you had a little bit of a doji in a strong tape, or almost not a doji, but like there were some say a hangman top, some say whatever it is. Close off the highs. There's your 294.42. On Friday, it traded below, so some guys who wanted this gap filled, traded it for cute cash flow, and now let's see if it holds the 8-day. Okay, every time it's seen the 8-day since August, it's held it. Sometimes it waits for both to be in line, but ultimately, be a buyer on this pullback unless it changes. So we'll figure that out. Ultimately, real cute traders made some money short there.
And Baidu, another name showing relative strength on Friday, it did slide off its highs, but held upper support and then was able to snap back and close the day up 2%.
Yes, and this one with the China resurgence, I think you could stay with it. A lot of guys on my floor were looking to buy that on Friday. You had a reversal the day before. You look at the chart. It's been acting very well, especially since this last gap. You have a bunch of gaps here. Here's one gap, never filled. Here was your earnings gap, which it held above, showing power. And then now here's an upper level base with, finally a green bar. Here's your channel here. In order for it to really get moving, okay, I would say, one little buy area is a 137.20. And then if it were to take out 140.55, which I would say it might take a little bit of time to do, it should continue. This is on the go-to list. It hasn't been on the go-to list for a while. Started waking up here when it broke that downtrend, and then after earnings. So keep it on that list. That there's definitely tradable action here, and I think this trend can continue.
All right, let's do some quick hits here and talk Apple. Of course, we have big events on September 10th and 11th, both this week, obviously. The chart has been looking good, but could this get a little bit tricky heading into these events?
They always try and sell the events, because they're always hyped a lot more, or they run into it. And this hasn't really run into the event. It ran before, and then it's been sustaining it. So maybe this time is different. I'm hoping, because I'd love to be able to be long this thing, have it hold above 502 and hit 520, 525 in the next week or so. But a few things have to happen for that to take place. What's kind of cool is that first I'll go over the chart. Here's your lower area. This is the lower consolidation phase. We had a really nice trade when it gapped up after earnings right around here, and also when it broke this mini downtrend. That gave you a swing move of a nice amount of points. Then it pulled in, and then when it crossed above this 470-ish area, it took back the 200-day, which I don't have in right now, but I would. And then Carl Icahn came out, and since then, it's been consolidating really well. Not a lot of opportunity in here. You had a few micro moves where it broke below this area, which when I was trying to hold it, got me out of some, and then below here also made it a little wishy-washy. Now, really, it's got to hold above this 502, 503. If it can get a move above that, then you draw a little bigger channel here. Your next obstacle would be about 513.74, and then above that, it could continue all its way to 540. I'd love to see this pan out. I think traders would be able to, make some money here sticking with it. So we got to get through the next 2 days. At least what they have here is they have one event day. So if they try and sell it down, then they have to worry about being short for the second event day.
Right.
Then you have Carl Icahn in there who, knows how to be involved with stocks. So hopefully, this move above this 502 area could be sustained and we could stick with it.
All right, now how about Google, which did end the day flat on Friday, but it held the 100-day that it had just been able to reclaim on Thursday. So that's a positive sign for the stock.
Yes, and for those that saw the day one last week, we saw day one in a few stocks when the market rallied, and this woke this up. You were able to take advantage of day two, day three. That's our rule that we talk about. So with that said, this is when it tried to break out of 906, and I was actually involved and got me out of it. Here's when it broke a minor trend line, and then here it held. Okay, this was your day one. Which I say test the waters on day one. Day two is typically when you try and add, when it goes above the prior day high. And then day three is when you trim and trail. So wound up holding in there the other day. I think it's trying to get back in the game and trying to get relevant again, which it definitely is. Short term, now see if it could stay above 873. If it could stay above 873 for a while, I think there will be another trade when it reclaims the 50-day. But ultimately, this potent move to the upside puts it back on our radar, and I think ultimately it needs to hold here. Otherwise, I think guys will lose interest once again.
And Amazon momentum has been slowing here, but the stock was still able to close above the 50-day and see a 0.6% gain on Friday. So will this be on your radar for some possible continuation?
What's funny is that Google and Amazon started the grind lower together, and then they both had day one to the upside together. So, both of these stocks, I think, are back in the active category. And you look here, after earnings, you had this false breakout, which led to a move to the downside. It had a descending channel here that this was your day one, a cleaner day one than Google. I remember then it opened down the next day. You could have played it from negative to positive through the prior day high here of 291.39. And then now it's hanging in there. So I'd love to see it hang out here a few more days, then go again. But ultimately, let it stay above this broken down trend and go sideways, and then we could get a new trend here on the right. So with that being said, I think traders are more constructive on both Amazon and Google because it's been off our radar since the slow grind after their earnings.
Well, and in general, we talked about the financials being one of the weaker sectors, but could Goldman be a potential play on your radar? It put in a bottoming tail on Friday.
Yeah, I would say the banks all should be on everyone's radar, and when the banks are stronger, it helps the overall broad market. So you look here at Goldman, which tends to show leadership here and there. I guess I haven't marked these up in a while. This was the last time it broke this this descending trend line. Then it held above it, which was right here before going again, and then you had a little break to the downside, and now you go across to where it broke out last time, and symmetrically, pretty much held. So with that said, it is trying to go sideways, so it looks okay. You do have another descending type channel here. So next obstacle for this, which would be good for the market, would be to get and stay above 158.05, and then it can continue, and then you want to draw like another channel here to the side. There it is, and we'll see how long it takes to maneuver it. Right now you're basically getting in the bottom end of it, so could be good, especially if the market gets better and it winds up taking out these highs.
So in summation, what's your advice to traders as they begin the first trading session of the week?
If you're coming in flat-footed today because of Friday's action, don't be upset with yourself. It happens. A lot of guys like myself made some cute money short or quick money short, and then and also got stopped out of good longs, and then on the way back up lost some of it and then didn't get back in and said, okay, I'm going to pull myself back. And if you pulled yourself back and you're coming in today relatively flat, that's fine. I still think the jury's out on whether or not that 1627 does hold. The more time that goes by, the more, I guess, conviction I'm getting that it does. But at this point, again, just like you saw with a lot of these names, you don't need to know whether 627 is the low when you see names like a Facebook or a LinkedIn or a Yelp or some of these other scenarios that are making really nice moves, even if the market hasn't picked a direction yet or whether it's going to resume. So with that said, play to your strengths, and also just keep risk down if if that's what you do. Tuesday, the president's going to speak again, and then next week you still have the Fed, so you still have a lot going on. So if you want to be tactical, take trades, just expand upon your P&L, and if you're a macro investor, just like we said in August when we're in the corrective phase, don't leave the stock market because you're seeing talk about Syria. Right. If you left the stock market because of 1987, if you left the stock market because of 9/11 or even the financial crisis in 2007, if you never got back in and stuck to your macro thesis or every month type of contributions, how well did you do? Not well at all. So pick your time frame, stick to it, and you can make money on a lot of different levels.
And that's your morning call for this Monday. Happy trading. Have a great day.